Welcome back, Binanceans. Thank you so much for joining us again in the Binance Theatre. This is going to be another really fun debate. For anyone who was here earlier, I got inspired by Breakpoint when we were looking at our speaking slots this year. Breakpoint's the Solana conference that happened in Singapore this year. And they said, no panels, only debates. And we wanted to try and bring some of that energy to the Australian crypto convention, because panels can be a bit boring. So we're going to pit two great minds in crypto against each other. On my right, we have decorated crypto investor Evan Luthra. Evan, do you want to say hi?
Hello, guys. Thank you for being here.
And to my left, we have Greeny, meme lord and crypto trader.
Hey, everyone.
So today we're going to be pitting these guys on a topic that both of them are true experts in. Should you hodl or should you be day trading? As a crypto investor, what is the best strategy for you and what is going to help you do the best with your portfolio at the end of the bull run? Guys, I'm going to try and stay out of this and let you go at it. Keep it spicy, hold nothing back. And yeah, Evan, give us an opening statement. You're on the side of hodl.
I mean, for me, I got in Bitcoin first time in 2014. Bitcoin was under $300. I mean, if I had just held on to Bitcoin and not invested in 600 other coins, I would have probably done a lot better. So I don't trade. I mostly invest early into projects, and I've done relatively very well doing that. But if I just held on to my Bitcoin and done nothing with it, I would have probably done equally well or even better. So I think that speaks a lot when I say hodling is the best strategy out there. Unless you have access to insider information, unless you have access to alpha that normally is not available for 99% of the people. And I mean, I can just start up with some statistics saying that 90% of people who day trade end up losing money. And very simply, trading is a player versus player kind of a game, where you are competing against somebody else and trying to take money from somebody else's pocket. Hodling is a player pump player mentality, where you buy into something, you really believe in it, and you hold it long enough, and then you tell everybody else about it, and it gets more adoption, it grows and grows, and then as more people buy into it, everybody wins along this way. I mean, right now, probably 99% of people that ever invested in Bitcoin and held are in profit. If you bought Bitcoin at any time in the history, you're in profit today. Maybe leaving the last 2 days aside, but you're literally in profit if you ever bought Bitcoin. So I think it's very hard to say that trading is a better strategy than hodling. There may be a very few people, there's a handful of people who get good at trading after years of training, after years of losing money, and then maybe if access to insider information, you could be doing good at it. But I don't know that many traders who are very rich, and I don't see that many traders on the Forbes 100 list. They got there because they're a trader. It's either builders or investors who invest long term.
Greeny, give us a retort. Why should we consider day trading?
Well, first of all, you've got to remember that you need to have money to make money, right? So I always come from the perspective that a lot of people who join crypto initially, they might not have a lot of money to start with angel investing or to get in early to certain tokens, right? So day trading allows you to go with the trends, trade where the market news is where the token trends currently are, where the narratives are, and you can liquefy your portfolio and grow that over time. And so if you're someone that has smaller wallet, or if you're only a hobby trader in crypto, trading allows you to take advantage of your time. And if you're poor with your time because you have to work full time, then trading allows you to come in when you have some liquidity or when you have the time to actually day trade. Now, obviously, within that, you can day trade the trends. So people that are hodling, sure, you might outperform if you buy it really early, but ultimately, you're missing out on so many trends that are happening every single day in the space. And you touched on just before the tools or the resources. And so that's what I do. I have the tools, we have the resources, and we use the community to drive all of us in a supportive way that allows you to out-trade probably hodling, right? Because you're trading with the trends and you're not missing out on what's happening at the moment. And what we're seeing right now is meme coins, right? They're thriving, and they've been thriving for over a year, and I've been trading them actively for over a year. And what you're seeing is if you can get in and out of those with the trends that are happening, you can capitalize that and compound your wealth very effectively over time.
I mean, if that was working, why do 90% of traders lose money, right? Why do International Bank of Settlements, really big banks have done studies, a lot of research, on all of them say the same thing. 90% of day traders end up losing money. Yes, you can make more money than hodling, but it's not like you have free time when you go into it. Like, I think if you really want to be a successful day trader, you've got to have a lot of time, and actually requires you to sit in front of a screen all the time and looking very actively. So I think hodling is actually something that requires, if you don't have time, hodling is the best strategy because you can buy in and you can forget about it. You can buy into something because you believe in it and the fundamentals are strong, and then you forget about it. And then long term, you make money anyways when it grows. Versus trading, I think, requires significantly more time. You actually need to be involved and you need to know what you're doing. And it's also like, your question is, if you don't have a lot of money, you can't hodl. I think if you don't have a lot of money, you should definitely not trade because you need to lose a lot of money trading before you even learn how to trade better. We had a fireside chat in the morning. You asked me the question, if I had $10,000 and I got into crypto for the first time, my advice then was forget about the money and try to add value. But in context of this conversation, if you have $10,000 and you're coming into crypto, I don't think you should trade because I think you will very quickly possibly lose that money. It's better off getting a diversified portfolio of assets, some L1s, some GameFi projects, some RWA narratives, and then, Bitcoin, obviously 50% of the portfolio, and you hold that. And I think you will do better as the cycle grows, and you will probably end up in a better position than you started. Versus if you come in as a day trader, you don't know. Tomorrow you may already be liquidated. So you're back at step 0 and you can't come back in. At least with hodling, it's a safer strategy. It works for 90% of people here. I mean, how many of you actually trade crypto? Can you raise your hands? Like actively day trade every day. And how many of you have made significant profit, over 100% trading crypto? Okay, so the hands definitely go down a lot. So most of you didn't raise your hands when it comes to trading, right? So if you're not trading and you don't understand what you're doing, you will lose money. And I will tell you, I have a lot. I invested in 600 companies before they started trading, right, in Web3 and crypto. I know a lot of the CEOs firsthand. They give me a lot of information all the time. We're listing on that exchange. We're doing this. We have this big announcement coming. We're going to spend $1 million next week on advertisements. Even after all of that, I think I'm a bad trader. I don't have time because I don't have time to sit in front of a screen and look at a chart all day and be a good trader. So I think trading requires significant effort. It's a full-time job. The day traders who actually make money do that full-time. Like, that's the only thing they do. They're not like doing a job or doing something else and then day trading on the side, because those people actually never make money. So I don't think it's the best strategy for anybody who's coming into crypto to start day trading right away. I think the best people who made the real OGs, we call them OGs because they got in early and they held their way through. That's why they become the OGs. They got in early and they held their way through. Any of the OGs who got in and started trading, I don't really know any OGs who did that. Like all the real successful guys in crypto were the ones who actually held it all throughout multiple cycles, and that's why they are where they are.
Yeah, but that's it. That's exactly why I do what I do. I educate people to become better traders because that is, as we've just seen, the gap. And that's where people are coming into because they can't get in early or they want to hodl, right? But it doesn't necessarily have to be day to day, hour to hour. It can be week to week swing trades. So, for example, Bitcoin last year, Ethereum last year, both their comparison against Solana was easily going to be a Solana outbreak against them and outperform. And what have we seen over the past year? Solana outperform Bitcoin and Ethereum. And so as an active trader, I was able to capitalize on that trend, completely de-risk my Ethereum portfolio into Solana, and I've 5 or 6x'd my bag because I had it in Solana over that time compared to Ethereum. So yes, don't get me wrong, I still hodl Bitcoin, I still hodl Solana, I hodl Radium from 0.2, so I'm very aware. But day trading allows you to at least use a percentage of your portfolio to, if you want to, like have a punt, have a gamble, or actively trade in different markets like futures or meme coins or altcoins or NFTs, Ordinals and runes. They're all thriving at the moment, right? Even Base is seeing a lot of growth at the moment. But by having an active approach, you can capitalize on those trends that are really happening this market. And I know so many people that are still Ethereum bag holders and are just waiting and waiting and waiting to see that get to an all-time high. What if it doesn't?
That hurts.
What if it doesn't get to an all-time high this cycle? Yes, your horizon might be longer, but a lot of people in crypto's horizon isn't as long as perhaps me and you, right? So that's another perspective that you have to take.
So, I mean, I agree with you that if you bought into Solana, you would have done well than holding Bitcoin, but you would have to hodl Solana to get that 5, 6x. it's very hard to think that you would come into Solana, trade your way to that 5, 6x. Like I'm also hodling Solana also. It's one of my biggest bags, my top 5 bags out there, right? So I think I agree with you that you can hodl other assets also. I'm not just talking about hodling Bitcoin, but the idea is you have to hodl and it's a better strategy. I mean, you talked about week to week, month to month, but all of that requires consistent effort. All that requires consistent effort, which most average person doesn't have the time to do. Really, I mean, they have full-time jobs, they're doing other things, they have families to take care of. People don't really have the time to actually do it successfully, day trade all the time. And also, I mean, futures and leverage, you gotta stay far away from that. Like, most people get wrecked and get liquidated very, very fast. So that's the last thing I actually advise. I actually advise people stay away from leverage trading. That's the easiest way to get liquidated, and that's the quickest way to lose your money. One of the quickest ways I ever found. So I would definitely, like, if I could give you one advice today is stay away from leverage trading. Like, it really crushes a lot of people. I've seen a lot of people who did really well and then got liquidated at the end. And also, I mean, there's different benefits to also hodling versus trading, right? The fees definitely add up. So if you're trading and you have a trade that's open for a few weeks, like you said, a leverage trade, the fees may just eat up into half your profits. So there's heavy fees that are involved when trading. The Binance guy can tell us about the fees. Binance is doing very, very well. So, I mean, so the fees definitely add up, and they add up very, very well. So you could make 100% growth on your portfolio, but the fees may take 50% if your trade's been open for so long.
Yeah, but in saying that, right, you're paying fees, but you're making more profit by actively trading, right? And within that, so going back to the hodl question, what if you're hodling the wrong bags? What if you're on Instagram, you're on TikTok, and you see a scam artist, you see a particular trend on there, you think it's the next big thing because this person's talking about the next big thing. And I know so many people in crypto that think that this one coin that they've seen, yes, that's the next Ethereum, that's the next Solana, that's the next Bitcoin. They hodl that and it goes absolutely nowhere, or it dumps all the way back down to zero. That also is something that you need to be more active on, right? Because if you're hodling the wrong things, then you're going to lose a lot of money.
So, I mean, you can prevent that. You can have a diversified portfolio, you know? You can spread your portfolio into different assets. If you hold 5 of the top, if you're like, oh, I only want to hold Casper, that's the best blockchain, I don't want to hold anything else. Yeah. That's not the right strategy, right? You want to hold Solana, you want to hold Casper, you want to hold Sui. You want to have a diversified portfolio. You decide, okay, I'm going to allocate 10% of my portfolio to layer 1s. I'm going to allocate 10% of my portfolio to RWA. And in that, you go into 5 different layer 1s. You go into 5 different RWA projects. If you follow the narratives and you diversify well enough, you will eventually hit the winning bag. So it's like, it's the same thing. You could trade the wrong coin, and you can lose a lot quicker trading the wrong coin than holding the wrong bag.
Not necessarily if you have a trading plan with clear entries, clear exits, take profits, and an invalidation level that hits, right? However, with what you just said, I've lost my point. I'll come back.
But also, in trading, there's a lot of emotions involved, and most of us are very emotional people. And when you involve trading, you start getting emotional with your trades. You get attached to this bag, especially, or you get detached very quickly. So when you're hodling, you don't let the emotions play you or sway you every day because you're hodling long term. So you also leave the emotions out. And for me, the way I see it is that it's very clear that most people, like you said, take profit, set target price. Most people don't actually follow that. Even when they trade, they don't follow their own targets. So they forget about, like I said, if you're a good trader, you can make more money than hodling, yes. But how many? Less than 5% of people actually are good traders. Most of them are not good traders. They're emotional traders. They're bad traders. And that's why they lose money. So, at a bigger context, when you're taking a group size of 100 people, in that 90 people will lose money trading. Those are the facts. Like, it's hard to argue against the facts. 90 people will lose money trading. But if 90 of them held to a diversified portfolio of crypto assets, or just held on to Bitcoin, you would do well. You may not do as well if you're a diversified portfolio versus just holding on to Bitcoin, but you will end up in profit over long term.
So I think we've seen more recently that a diversified portfolio actually might not be the best play. We've seen Raoul Paul, big advocates in the space, come out and say, you probably are better to consolidate your portfolio into particular assets because it's better because you're not spreading your liquidity thin, right? And if you come from the perspective of a lot of people out there who only have $100 to invest or trade, $10,000 to invest and trade, if you're spreading that across 50 assets in the case that you've just explained, you're not going to make it in that way because you have to keep track of all these trades as well, and you don't know which ones are going to go up, which ones are going down. But you're spreading your liquidity too thin that you're not actually putting yourself into the right plays at the right time. So still having an active approach to the market is probably still the best way to go about it.
So, I mean, your question before was about high conviction. Somebody has a bag and they're crazy about that coin and they just hold that. Against the defense against that, unless you're very bullish and you know that's going to be the best, the defense against that is to have a diversified portfolio. Your point about somebody coming with $100 or $10,000, and for people like that, like what I spoke in the morning is like, forget about the $100 and forget about the $10,000, right? Buy some Bitcoin and forget about it, and then come into the space, try to add value for people. Crypto is one industry where if you bring value, you get paid for value. It's one of the only industries in the world that if you bring value, you get paid for that value. So come into the space and see how you can bring value without your money, right? How you can find a project that you're passionate about, become a community moderator, try to help other people get involved into the project, onboard more people into the project, and you will probably make more money doing that and learning. You will learn more, and then you will become a better trader or a better hodler anyways. I don't recommend people coming into this space with $100 or $10,000 and try to say, how do I make this 100x? That doesn't work. You will probably end up losing your money quicker than you know. You will probably have a good lesson, but you will probably end up losing your money quicker. If you hodl something, you forget about it, long-term it'll pay off anyways. But you are better off trying to add value into the space and finding something you're passionate about. You could be passionate about any industry and find a project that's trying to disrupt that industry using decentralization, using Web3 technologies, and then add value from there. I don't think people should come in. I mean, you said you run a trading school, right? I don't know about your school, but I know I run a fund, KOL Capital. We have a lot of 500 influencers under our group, and a lot of them run schools. And when I talk to them, most of the students in their school end up losing money, and then they don't pay the next month or the third month fees because they already got liquidated.
Sorry to interrupt. I've got some members from the group here, so you could ask them directly if they've made money in my group. So, I mean, that's over to the crowd. I don't know. What are you guys down the front? Yeah? Yeah? So,
well, I'm happy for you guys, yeah.
No, but that's it, no, right? So I don't ever, and these guys will confidently back this up, I don't say, I'm here to make 100x, okay? Because you're already with the wrong mindset. It's about the small wins, okay, and compounding them over time and using simple trading strategies, Fibonacci tool on a meme coin, and just taking the 786 to the 618, and that's nearly a 2x on some of these meme coins every single time. And so if you study enough mathematics and study enough trading, understanding with psychology and that sort of stuff, it's a simple strategy that has worked for me and many people for now over a year and a half that allows you to really capitalize in that way with a more active approach. Now, yes, I am still very much a hodler, and what I like to do is I like to active trade to add to my hodl bags. And so I can do both, and then over time, you're growing more portfolio wealth than what you would have if you were just hodling at the same time.
So, I mean, the 2x on the meme coin strategy is like, that may work for a very, very small amount of people. 95% of people still lose money trading meme coins. And the main issue with, you mentioned the tools, the Fibonacci tool and the resources and reading the charts. You got to remember, that is available to everybody. Everybody has access to those tools and that knowledge. And that leads to a player versus player. You're competing with somebody who also has these tools, who also has education. And now, in today's world, you're competing with AI and high-frequency trading bots who can do what you're doing much better and much quicker. Like I said, if you have alpha, if somebody's in a group like yours where you are working with close-minded people and you have some alpha, you can normally make money on that, yes. But most people will not have alpha. You will not have access to information that is easily available to other people. So most people will not have that. So if you have access to insider information, then yes, you can make good money trading that. But most people will not do that. Most people will get wrecked when they hold a meme. They get wrecked when they try to trade a meme, or they get wrecked when they try to compete with better tools, people with players who have better tools and better resources available to them. And it's only going to get harder and harder as AI comes in, and then they can trade better than you.
Yeah, I'm very much in that camp that algos, right? So AI algorithms are probably the future, right? And that's going to be fascinating because I was actually talking to Craig and my Uber driver about this yesterday, and essentially, yeah, the Uber conversations you have are insane, eh? But anyways, we were kind of talking, does that actually make it easier for you to future trade because, or not future trade, but trade in the future, because it's more streamlined because everyone's using the same AI tool, so therefore you can kind of predict it in a higher probability than what it currently still is, because as you're saying, it's more PvP.
I mean, the way I see it is if everybody's using the same tool, the tool is not good enough, right? I mean, if everybody's using the same tool and access the same tool, there's somebody else who's built a better tool. Also, when it comes to trading, the bigger the ticket size, the lower the impacts and higher the impact on the chart. If you're trading a meme coin with $100,000 in liquidity and you come in and trade with $100, it doesn't make a difference. You come in and trade with $100,000, you can move the chart very, very easily. You can manipulate the coin as you want. So, like, as more people use the same trading bots, they flop because then the bots cannot work on that big of a AUM, assets under management. So that's why these things need to be like done better and better at every step. That's why these trading AI bots, actually, the best traders I know, they don't share their alpha. They don't tell anybody else how to trade, and they keep it just for themselves. Because if they can make their money really well, they don't need to tell other people how to do that. They can make a lot of money because if you share the alpha with more people, you're sharing your profits. That's what you're doing. If you have alpha about something that's going to go up, I was literally coming in. I work very closely with the SUI team. I have a group also. It's just all the CEOs and people I invest in. It's like, it's not an education group, just people share information with each other. My friend sent a coin in there. It's like, this is a new one that SUI just backed. And I'm like, what are you sending before sending it to me? I want to get in, right, before everybody else gets in, because that's the whole thing. If you have crypto is all about access to information. If you have access to good information, you can make really well returns with that. So, I mean, if somebody is really, really good trader also, I know some really good traders, the top 5 on Bybit, on the Bybit track, and they don't share any of their information. They don't tell anybody how to trade because they know that if they do that, then they don't maintain their edge. The edge is open for everybody. So I think like that's what I feel when it comes to trading. Like you want to keep your trading secrets to yourself if you're really good at trading. And I think you can make money with trading, but you would lose a lot of money before you can become that. It takes a long time to learn how to trade and learn all these tools, and you have to be at the edge because these tools and these are getting better and faster than we can get better. So you got to be on the edge to really win there.
I'll give you the closing comment, Greeny, and then we're going to ask you guys to vote for who you think won the debate. Greeny, close us out, please.
Well, I suppose I'm just good in that sense, right? I come from an education background, so for me, I want to educate people. I get more satisfaction at providing value or information or resources or bots to people than me making money over time. And that's always been my philosophy, and that's how I like to go about my life and my situation. So yes, there are people that are obviously secretive and have made millions, don't get me wrong. But at the end of the day, yes, I think having an active approach is the best way to go about crypto in general. I think hodling is great, but also having an active approach in a day trade, in a meme coin trade, or a Bitcoin versus Solana chart allows you to capitalize on the trends that we see in everyday crypto. So that's what I'll close with.
All right, that was pretty good, guys. That was really, really interesting to listen to. Can I please get a hand up first for Evan? Did he convince you that hodling is the best strategy? That's a pretty good showing. And for Greeny, day trading. I think Evan has it very slightly, guys. Just before we wrap up, where can our audience find you guys, follow along and learn more?
I'm available on Instagram and Twitter at Evan Luthra, and also the Telegram group Evan Luthra VIP. But yeah, all are free to join, free to access, and everything is free education. I mean, it's not education, but I share what I invest in long term. So thank you guys. Appreciate your time.
And Greeny Trades on Twitter, Greeny Trades on YouTube as well. And then, yeah, I run my trading group, Greeny's Trading Group, so you can check that out on Twitter. But yeah, thanks for all tuning in.
Thanks, guys. I hope you have an exceptional convention. Please come past and see us at the Binance booth. Come past tomorrow. We're going to restock the merch because we got cleaned out.